So good afternoon everyone. My name is Maurya Hanspal and in this session we're going to talk about the NFOs. Now what exactly do we mean by the NFOs and why are the NFOs important? Okay. So in the initial session I was talking about IPOs. Okay. And my main purpose of starting your NFOs after IPOs was so that once we have done the concept of IPOs, it would be very easy for you to understand NFOs. Okay. So when we talk about IPOs, keep one thing in mind. IPO, it takes into consideration the listing of shares of the company, individual shares of the company. We call it as IPOs when the shares of the company are being getting listed. But an NFO is a new fund offer. NFO is a new fund offer. IPO is an initial public offering or the initial public offer. FPO was a follow-up public offer. An NFO is a new fund offer. So by the word fund, we can come to an understanding that a fund is being launched in the market. Now, which kind of fund? It's a mutual fund. It's a mutual fund. It is an IPO. But when a company is coming up with a mutual fund, it's a new fund offer. So how a mutual fund can be listed? See, the open-ended mutual funds are, as we talk about, the open-ended mutual funds. They're compulsory to get listed on the stock exchange. They're open-ended mutual funds. They have to be listed on the stock exchange. Now the question arises how these kind of mutual funds are coming up and why these mutual funds are coming up. So coming back to the concept of IPOs. So tell me why the IPOs are coming up. Obviously, when the company comes up with this final prospectus, the company mentions that for what purpose the company is coming up with an IPO. Also in the draft red herring prospectus or the red herring prospectus as you call it, it's clearly mentioned that why the company wants to come up with an IPO. The company might to come up with some expansion plans or some diversification plans. The company comes up with opening some more new outlets of the company, or the company wants to diversify abroad, or the company wants to kind of reduce its debt, or the company wants to indulge more into the capital expenditure, as we can see in the case of the loss-making platform companies, right? So the purpose of the IPOs can be like different for different companies. In some of the IPOs, even the cash comes with the promoter only. In that case, if the cash is coming up with the promoter and the promoter is using it for no purposes, and the main purpose is कि पैसा बस कंपनी में आ रहा है and उस पैसे का कोई रोल नहीं बताया गया, in that case that IPO is not good because ultimately no role has been specified that for what purpose the company is issuing the IPOs. Some IPO people also claim that they're coming into the market for the purpose of giving dividends. Why are they coming into the market for the purpose of giving dividends? Don't they have any future projection or diversification plans? And that needs to be taken into consideration. So that was for the purpose of the initial public offerings or the IPOs as we call them. But why the mutual funds are coming up into the market? In the recent past 2 to 3 years, especially in the COVID-19 pandemic, people realized that the liquid cash or the liquid savings were not enough to sustain their livelihood because a large number of people had lost their jobs and a large number of the amount was spent on the health expenditure. Lakhs and lakhs of rupees were spent on the health expenditure and household expenditure. Even the salaries were reduced or the people become jobless. Okay, so that was the scenario. And at that time, people realized that liquid cash was of no use. Okay, and the people started to kind of realize that, and the youngsters, especially in those families, they started to invest in the stock market to earn some money because the most of the people have been starting to realize that the fixed deposits and saving deposits, they do not give you an rate of interest because that rate of interest either it does not beat inflation or it really beats inflation. So now people have started to invest in stock markets and the mutual fund is the best scenario, right? And due to the demand, the asset under management of the mutual funds, we call it as the asset under management, popularly known as the AUM. Even the asset under management of the mutual fund also increased and it surpassed history. Okay, so like that was one scenario. The asset under management of these mutual funds also increased because ultimately people have realized that these kinds of stock market investments and mutual funds can help you to realize a better return as compared to other investments, right? So that was the scenario. See, FDs I particularly not even call it as an investment. I just call it as an a buffer fund or a contingency fund or an emergency fund. Okay. So when so many people are like investing into the stock market and going for mutual funds, so these mutual fund companies also have to come up with new offerings, some customized made offerings or tailor made offerings, so that they can help the people. And because of that reason, further AUM or the asset under management of these mutual fund companies or the asset management companies was also on a rise. And what do we mean by the asset under management? It is nothing but the amount that the fund has. It can be in terms of the shares the firm has bought, the investment in bonds, and some cash. So basically, all the securities in which the company has invested. That is ultimately the assets of the company. And ultimately, cash is the biggest asset, as we all know. When people are giving their money to these asset management companies or the mutual fund companies to get invested into the shares or bond markets or the cash or any other market, ultimately cash तो like companies का खुद का ही होगा, but shares और bonds में जो पैसे लग रहे हैं वो like people are giving to the AMCs, right? So ultimately these are the assets of the company and they have been rising over the years because people have realized that the liquid cash or the liquid savings is not enough to sustain them and they need some profitable investments for future. That was in the case of a new fund offer or a mutual fund as we talk about. All right. Further, if I talk about what? If I talk about, yeah. So now these companies have been coming up with new offerings, some customized offerings, some tailor-made offerings also, so that people can invest into those companies. And also recently the trend for international investment has also increased because international investments, they I mean when a person is in India, for him international investment is into the US stocks or European stocks or Russian stocks, right? So basically what is happening, they give you the benefit of diversification. They also give you the benefit of the foreign exchange translation currency because ultimately the dollar has appreciated over the rupee in a long term scenario. They also give you the benefit of buying fraction of shares. In India, you cannot buy fraction of shares. For example, if you want to buy like one share of the MRF company, which is into tires, you have to pay like 78,000 to 80,000 rupees to buy just one share of the MRF, right? And you cannot buy like 2 units or like half of the MRF shares or one-fourth of the MRF shares, right? But in US, you can buy like one-fourth of Google or like 0.2 units of Google, so that is possible. Okay. And like recently, we also found that the investment limit for the international mutual funds had also crossed. It was around 7 billion US dollars, 7 billion US dollars it was there for all the AMCs altogether, and $1 billion for each, like 1 billion US dollars for each of the AMCs had the limit for international investing, and 7 billion US dollars was the overall limit for all the AMCs to invest in international market. So that has been crossed. And even these new funds like that were investing money in abroad, they've stopped accepting the payments also. Okay, but in case of ETFs, the overall limit was like 1 billion, and per fund limit or per AUM limit was like 300 million. So that is still there, and that is where the companies have been launching like new ETFs, exchange traded funds. So that is also the difference that you need to know. The NFOs can also be launched in case of an exchange traded funds, right? So the one difference was people were asking, like a large number of experts also, like there is a company called Navi. Okay, so like Navi was coming with its international investing fund, and that was an ETF. So people started questioning the country that RBI or the SEBI basically has posed the limit. That is 7 billion limits for all the companies combined for US investing, and the 1 billion limit for each of the fund houses has been like crossed. Because how are you like bringing a fund? So they basically said it's an ETF, it's not a mutual fund. Okay, so the limit for ETF has not yet crossed. The limit for ETFs, if we combine all the AMCs, is 300 million. It's 1 billion, whereas per AMC limit is just 300 million. But in case of a mutual fund, the overall AMC, like when we combine it, it's 7 billion, but per AMC limit is 1 billion. So that you need to understand while you are like investing into these. About the mutual funds and your new fund offer is coming up in the market, the companies can come up with an open-ended mutual fund. It can come with a close-ended mutual fund. It can come up with an interval mutual fund on the basis of the structure. In open-ended mutual fund, you can redeem your investments. In close-ended mutual fund, you cannot like redeem your investment. In case of interval funds, you can redeem the investments at a certain point of time. On the basis of this style, you can have an active mutual fund that tries to beat the index, or you can have a passive mutual fund that tries to copy the index. On the basis of the investment objective, you people can have an equity fund which invests more than 80% into the equity and equity related instruments, a debt funds that invest at least 80-25% in debt related instruments, or a hybrid fund that follows a ratio of 60-40, 60 equity, 40 debt, or 40 equity, 60 debt. So all these scenarios can come up in the market. Okay, that's all for today. I'll see